Assalamu alaikum wa rahmatullahi wa barakatuh, my people. Welcome back to the second video of Project 30 for free, a 30-day module where I teach you guys how to trade from the ground up. If you guys haven't seen the first video, make sure you go check that out because anything I'm about to say in this video, you're not going to understand. But yeah, without further ado, let's get right into it. Now, a lot of people DM me after the first video and they'll ask me, yo, like, I appreciate obviously what you've done for us, but how comes you wear a mask? And that's simply to protect my identity and protect myself from evil eye, which is more of a religious and spiritual point of view, but nevertheless, what matters is what you're learning in this video. Now, another thing, I forgot to say in the other video that what I'm teaching you guys how to analyze is EURUSD, GBP, USD. These are two different currencies, two different pairs, two different currencies, same thing. Now, there's other pairs out there like, I don't know, Euro, CAD or something. There's different pairs that you can trade. There's also stocks, indices, futures like Nasdaq, S&P 500. You guys might have heard of these things. Now, can you trade them with what I'm about to teach you in this video? Yes and no. Now, why I say yes is because here and there I will try out other pairs like such as gold. Here and there, once in a blue moon, I'll trade Nasdaq or US 30 or S&P 500. However, these days, if I'm being completely honest, or at the time of recording this video, I'm only trading EURUSD and GBP USD. That's simply because these pairs I've been trading for quite a minute now, so it only makes logical sense that I go ahead and continue trading this. So because of the market experience I have with these pairs and I know how they move and I've backtested them for years, naturally I'm going to trade these pairs a lot more confidently and a lot more kind of better in comparison to other pairs which I've never traded before. So my advice to you guys would be trade these pairs. If you want to trade other pairs, go ahead. Because you guys are beginners, you're going to learn how that specific pair moves in comparison to other pairs. So for example, pairs like gold, I know that they're a lot more volatile in comparison to like EURUSD. If a pair's volatile, it just means that it moves in one direction very quickly. It can switch up just as quick. Does that make sense? Whereas with EURUSD, it's a bit more slow paced, but I still like it because it still has volatility. So with that being said, make sure you guys get a pen and paper and take notes. Anything that you guys learn, make sure you dot it down, and at the end of this lesson, just go over your notes. So what is the title of what you guys are going to learn today? I'm going to be teaching you guys something called a break of structure or a market structure shift. That's going into slightly more advanced market structure. Last video I taught you guys how to read like higher highs, higher lows, bullish, bearish. As you guys can see, bullish, bearish, bit of accumulation going on down here, bit of more of accumulation. But there's one thing reading these charts and knowing what you're actually seeing, and there's another thing knowing how to predict the market and where it's next going to go. Does that make sense? So this is what inshallah I'm going to try to help you guys know in this video. Now, in a bullish market, I told you guys that we are constantly making higher highs and higher lows. Now, a break of structure is just when a high gets broken above. As you guys can see, this here would be your break of structure. This high here, we retrace. Whenever we come back into the range sort of thing, this is called a retracement. Right? We have to retrace before we establish a new higher high. So this high here gets broken past and we make a new higher high. Again, this high here, we break above it and this is your breaker structure. Now, same thing going for a bearish market. What are we constantly making? Lower lows and lower highs. So when this low gets broken past, as you guys can see, we establish a high, a low, we retrace a little bit and then we break past this low. This here is called a bearish breaker structure. Again, you guys can see this low here gets broken past. This is your breaker structure. Now, cool, you guys can mark out a breaker structure, but what does it actually tell you about price? Make a note of this. When price breaks structure, it's telling you that price wants to continue going in that direction. So in this example where we are bullish, when price breaks above this high, this is now telling me that cool, I want to ideally be in a buy. I want to be taking a long. I don't want to be going against the trend. Remember, there's a saying in trading that the trend is your friend. And same for a bearish example. When we are breaking structure continuously towards the downside, this is telling me that yo, the market is bearish. We're not trying to buy. We want to short sell. Now this is the beauty about trading. You can make money when prices go up or down in comparison to any other business out there. How? It's very simple. Obviously in a buy, you're just buying it for, I don't know, £10. You hold it up to when it's worth £100 and then you sell it and you keep a £90 profit. However, in a short sell, how do you make money? Now you see the difference in the colors. This is your entry. You guys can see this little gray line. That's your entry. So let's just say at the entry, you guys can see obviously the higher we go, the bigger the number, the bigger the price is, and the lower we go, the lower prices get. However, let's just say this entry is worth $100. Now this blue box here is your stop loss. Obviously, if you guys might be red, green, purple, I don't know. But of course, because it's higher up on the chart, it's going to be worth, let's just say $150. Now this line here is something called your take profit. Whenever prices hit either your take profit, your entry, your stop loss, it will automatically take you out of a trade. Now of course this is lower on the chart, so this is going to be, let's just say, I don't know, £10. Now how does a short sell work? Very simple. How are you making money from prices going down? Now this is a common analogy I like to give to all of my students. Let's just say, for example, you have a hoodie. Now at this current point in time, your hoodie is worth, let's just say that at the entry over here, your hoodie is worth $100. So I come to you and I say, please can I borrow your hoodie and I'll give you back however much it is valued at a later point in time. So as for now, your hoodie is worth $100. So what do? I borrow your hoodie. I now have your hoodie. Is it my hoodie? No, I've just borrowed it from you. How much is it worth? $100. Cool, we're on the same page. What do? Straight away, as soon as I take that hoodie, I sell it. How much do I sell it for? What is valued at? $100. So I will sell it for $100 and now the hoodie's out of the equation. And now let's just pretend this is my wallet. So cool, I have $100 in my wallet. Obviously, is this money mine? No, because it's your hoodie. I still have to pay you back however much it is valued at a later point in time. Now let's just say in best case scenario that the hoodie goes down in value and it now goes down to $10. I come back to you and say, check the markets, your hoodie is now worth $10. So what do I do? Like the contract we agreed in, I pay you back however much it is valued at a later point in time when I'm ready. Now that I'm ready, your hoodie is worth $10. What do? I give you $10. Guess what? I have $100 in my pocket, which isn't mine. However, I just give you 10, which leaves me with $90 profit. That is how you make money in a short sale. You borrow an asset, you sell it straight away. You come back to the borrower or the lender at a later point in time and you give back however much it is valued at. Now let's just say something very unfortunate happened and price reversed and it hit my stop loss. As you guys can see, when it hits your stop loss, it's going to automatically exit you out of the trade. So now the hoodie is worth $150. This is my point of me saying I do not want to be in this trade any longer. If it hits my stop loss, we have now invalidated the trade setup, meaning that we're most likely going to continue going higher, and in that case, I'm going to lose money. I have to come back to you and say, cool, I no longer want to be in this trade. Your hoodie is now worth $150. Out of my wallet, from the $100 I have earlier, I have to give you that. However, what else do I have to give you? Another $50, which I owe you because your hoodie is now worth slightly more. This $50 is coming out of my pocket. So this is where I lose money. I hope that makes sense for you guys. Now, what is a market structure shift, or as other people like to say, change of character? So like I said, we can never just continue going up for the rest of our lives. Eventually the market, wherever goes up must come down, right? So let's just say we get something like this. Price break structure one more time, but eventually we fail to go higher and instead we create a lower low. As you guys can see, we went from being bullish, right? Higher highs and higher lows, higher highs and higher lows. However, we failed to establish a higher low and instead we created a lower low. This here is my market structure shift or my breaker structure. Market structure has now shifted to being bearish or being bullish if it was the other way around. Now, the main difference between a market structure shift or change of character and a breaker structure is a market structure shift is telling us that market price is now shifted, right? Whereas a breaker structure is more for a continuation. So if we're continually breaking structure towards the upside, this would be a breaker structure. This here would not be a market structure shift. Why? Because the market can't shift structure. It's still being bullish. So I hope you guys understand this. If you guys don't understand that, then la hawla wa la quwwata illa billah. May Allah make it easy for you. Maybe watch the video again, I don't know. But we're going to move on to real life chart examples. Now, before I show you guys how to mark out a breaker structure with like the actual charts and actual candles, I need to teach you guys 2 rules to mark out a valid breaker structure or to mark out a valid market structure shift. The first rule is price has to break above or below a swing high or a swing low. So I'll write that out for you and I'm hoping you guys will make a note of this. As you guys can see, price has to break above or below a swing high or a swing low. You guys are probably thinking, what the hell is a swing high or a swing low? I've never heard this in my life. Calm down, calm down. Like I said, you're going to get some, So how do we identify a valid swing high or swing low? So first of all, let's just zoom in and we have to pick 3 candles. Now this here would be our swing high. How do I know? Because the rule for a swing high or swing low is a candle which sticks out more in comparison to the candle on its left and right. Think of, you know, like them Formula 1, them go-karting little, what do you call it? Like them little stands where the first person stands here, second person stands there, third person stands there. Number 1 is your swing high. So as you guys can see, this candle here, it points out more in comparison to the candle on its left. The candle on the left is all the way down here and the candle on the right. So this is our swing high. Again, let me try to identify another swing high. There are so many swing highs down here. You guys can see this high here would be a swing high. Why? Because the candle on its left is all the way down here and the candle on the right is all the way down here. So this would be our swing high. Again, this is a swing high. How do I know? Because the candle on the left or the candle on the right is all the way down here and the candle on the left is all the way down here. So like I said, think of like your head and shoulders, right? Your head stands out more in comparison to your shoulders, right? Look at your left and right, only 3 candles. Now let's look at some swing lows. You guys can see this candle here is a very obvious swing low. How do I know? Because the candle on the left is all the way up here and the candle on the right is all the way up here. So this one, because it dips down the most, this is my swing low. Again, this here is a swing low. How do I know? Because the candle on the left is all the way up here, candle on the right is all the way up here as well. This is my swing low. But like I said, price has to break above or below these swing highs and swing lows in order to identify a valid breaker structure or a market structure shift. As you guys can see, these are both valid breaker structures. In this case, this would be a market structure shift because price shifted back to being bearish. That is the first rule. We have to break above or below a swing high and a swing low. What is the second rule you guys are asking? Very simple. There has to be a candle body closure above or below a swing high and a swing low. What do I mean by that? Let me show you. Like I said, calm down, you're going to get some. This here is a swing high and price goes above the swing high. However, what does it do? It invalidates this second rule. Why? Because the body didn't close above this swing high. This is just a wick. This entire thing is just a wick. There's no like body closing above this swing high. So in this case, this is not a breaker structure to me. This is just a fake out. And you see how these rules protect us? Because if I was to see this as a breaker structure and I was to like try buy, I would have just got stopped out. Why? Because it's not a valid breaker structure. It's a fake out. And this is why our rules protect us. I'm going to tell you guys this now. As we go along with all of these videos, I'm going to be teaching you guys rules. Follow these rules. Why? Because they'll protect you and they'll save you in the long run. Now let's go over here. What can we see? We can see price breaks below this swing low. What is this? This is clearly like a market structure shift towards the downside. You can see price was slightly bullish and it was going up. However, we shifted structure towards the downside. Now let's confirm it with our rules. Is this a swing low? Yes. How do I know? The candle on the left is slightly taller. The candle on the right is all the way up here. What is the second rule? We have to have a body closure above or below. In this case, because we're going lower, it's going to be below. You can see this body here of the candle, it closes below the swing low. So this is a market structure shift. Now what I'm going to do with you guys is I'm going to go over like 2-3 random examples. I'm going to ask you guys, have I marked it out correct or incorrect? You guys are going to have like 3 seconds to figure it out, right or wrong. Pause the video if you need. And yeah, so cool. Is this a valid breaker structure? Yes or no? Incorrect. Why? Because that price has gone above the swing high. However, it's invalidated the second rule. There's not a body closure above. So in this case, this is just a fake out. Ignore it. Now we're going to go over another example. Is this here a valid breaker structure towards the downside? I'm going to give you guys 3 seconds to figure it out. Correct. It is a breaker structure. Why? Because this is a swing low. How do I know? Because the candle on the left is all the way up here. The candle on the right is all the way up here. And we have a body closure below the swing low. So this is indicating to me that price wants to continue going down. As you guys can see, price continues going down. You guys can see how just learning such a basic concept with these charts, you can somewhat slowly start predicting these moves. Does that make sense? I'll go over one more example. I need you guys to figure out if it's right or if it's wrong. Have I marked out a valid breaker structure towards the upside here? A bullish breaker structure. I'll give you guys 3 seconds to figure it out. No, I've done it incorrect. Why? Because this is not a swing high. This is just a normal candle. This here isn't a swing high either. Why? The candle on the left is taller. This here isn't a swing high either. Why? Because the candle on the left is taller. Again, not a swing high. Not a swing high. This is a swing high. I want to see price break above this high to confirm to me that price has broken structure towards the upside. And you can see, once we get that breaker structure, this is confirmed. Now we want to go higher. What happens? Price continues to go higher. I guess I'll spin it for this video. What I want you guys to do is, like I said, go over your notes after every single one of these lessons to make sure you drill this information into your head. Second thing, practice, because repetition is the mother of all skills. Mark out your breaker structures. As you guys can see, just go to your charts and you can see this is a market structure shift. We have this market structure shift, and what happens? Price continues to rally up and it shifts structure from being bearish to establishing higher highs and higher lows. You can see we have a low, a high, higher low, higher high, and then we continue to buy up. Like I said, you guys want to be making sure you're practicing this, practicing. If you guys want more details on how to recognize a real breaker structure in comparison to a fake out and a fake breaker structure just to get you in, then make sure you go ahead and check out the link in bio and join Project 30. That's where all the details to where the actual strategy is and how to recognize these real moves in comparison to the fake moves. We also come forward with 24/7 support, so whenever you guys send screenshots, of course, don't message me at 3 AM in the morning. I'm going to be sleeping. Maybe one of my mods will message you. But like I said, whenever you guys ask any questions like, yo, have I marked this breaker structure out correctly or incorrectly, we will get back to you. Like I said, if you guys want to take your trading to the next level, make sure you check that out. Anyway, it's been your boy 1FX. Take care, my people.